Hello guys, this is Sofinta No Dube, your currency trader and currency coach at FX Link. So I'd like to welcome you back to another episode of our Forex weekend market review. So this past week, as you saw, we decided to be a little more generous where we gave you two more analysis than we usually do. So to kick off things, overall this past week, if you managed to see our video, we had up long buyers, where we said that we were waiting for price to give us a bit of a push to our kill zone, and this way we were preparing for a long opportunity. And to try to narrow down our kill zone, this is where we grabbed our extension tool from this X leg up to a A. And we saw our significant level, this way we got a 618. And to strengthen our case for entry, we decided to grab our extension tool and dragged it from my X to A back to our X leg. And as you can see, we had a bit of a 618 cluster and extension and retracement tool. This is where we tried to grab our rectangle and try to narrow down our kill zone. And this is where we came up with the more kill zone of our kill zone, if I might put it that way. And as you can see, things didn't go as our way. What finally happened, price action did manage to give us a push to a kill zone, but then price action decided to break lower, giving us a break below, close below, violating our major structure. This prepared us for a trend continuation opportunity, meaning that in this case we won't be looking for a long opportunity just as yet. We will expect price to at least continue back to this structure level. So what actually happened? Let's switch to our trading time frame. Okay. So as we mentioned that we're expecting price action to give us a bit of a relief in our kill zone. And the first thing that I was looking at is to get our two most important filters, which is a bullish divergence and a double bottom, where in this case we did manage to get a bullish divergence. And this way you remember me saying that we had one of our filters in check or waiting for the final thing, which is a double bottom, and this is why we couldn't take this trade. So first thing is, you see this way price action, this is where market was this past week. Pardon me, this was the, let's look at the date. Okay, this was the 4th. First action went 6th and 7th. That's what we were looking at on our past video, and we mentioned that we were waiting for at least price action to give us a push and shouldn't. This was the key thing that I mentioned. Price action should not break below and close below the wick of this candle. And as you can see, inevitably price action did manage to give us a rally, not only managed to break below but close below. And this was the first sign for trouble, guys. This is the first sign that showed me that I won't be looking for this long an opportunity. This one inverted our double bottom, and this is where if you're looking for a short hop in the market, this is where past support would have become a future resistance, and let's say you could have went down and possibly took your profit some at this point. I wasn't interested in this trade. And again, as you can see, price action gave us a bit of a relief. They continue to the downside, break and close below our previous structure level, continuing to give us a sequence of lower lows. As you can see, let me grab this. We made a lower low. Okay, pardon me. We had a lower low. We had another lower low, and we continue to the downside, forming lows. Overall, this past week I didn't get my complete setup in check, so I could have missed this trade. Even if I did manage to get a complete setup, then I would have been stopped out. But this just to show you again the importance of sticking to your plan. If I had broken my rules and panicked, had a fear of missing out, I could have went in aggressive. You would see how the story would have ended. As you can see, the price action is currently at, we're in an oversold state. This way price action is again approaching our past support level. so price action might be looking to continue to the downside. And as I mentioned, I won't be looking to get involved until I get attached back attached at my demand area. So this is one of the pairs that I took analysis on. Didn't get an entry point, but yeah. So another pair that we were looking at is the dollar yen, my favorite pair. Let's move to the dollar yen. Dollar yen. We get the dollar yen. Okay. So on this pair, as you just saw from a recap, we're still in the trade. We just completed our setup, waiting for price action to give us a push to the upside and touch our 618. But not only did we touch our 618, this is where we got a double top. A double top on the higher time frame. This strengthens our case for entry. Getting a double top on the higher time frame gives us more validation than getting a double top on the lower time frame. And not only that, as you can see on our other side, this is where we get a bullish divergence. So this is one of the trades that is an analysis on, still in play, and I believe that there's still a chance for you to hop in, as we were waiting for at least to get a push back to our demand area. And if I could grab this tool, and price action is currently at, we're still looking at a possible move of 130 pips. So there's still a chance for someone to hop in. Switching to our trading time frame, let's see how we could still take advantage of this trade. Okay, so as you know, I always wait to get two filters. We said this past week I was waiting for pricing to at least give me a push to the upside to this core zone, which we did, and we're waiting for one more filter, which is a double top, and we didn't get a valid double top as this candle. Let me try to zoom it in so you could see this candle managed to break and close above the wick of this candle, invalidating our double top. So accordingly, I took this trade, so it wasn't a complete setup, although you could see we now have a rally to the downside. But there's still a chance, still early in the trade, there's still a chance to hop in. Now, how do I plan to hop in? First thing you can do, you can add your retracement tool from this X to where price action is currently at. I think we must still get a bit of a relief to the upside. As you can see, we just got a double bottom, giving us a signal for a bit of a relief to the upside. And this is where you might be looking for significant areas. This is where we get a 618. If I could grab my tool, you can see we have a major structure level at this area at our 618, and you could be looking for back at this retest of structure. Now, I can't say specifically which level you should look at, but all I can say is that you could wait for price action to at least give you a push, and as soon as price action gives us a push to one of these areas, you can look for two filters again, which is you could wait to get a double top, and if you do get a double top at our 618 and a bearish divergence, you could be looking to take this trade. But in this case, you only have a wide risk to reward, a wide risk, because if you have an entry somewhere at this point, you would have to have your stop loss above the wick of this candle, and if this is 28 pips, and approximately you'll be looking at a risk of 40 to 38 pips, and it's not bad. Depends on your appetite and your risk. So even if that is the case, you will be looking for 50 profit back at this retest of strike, and this will be our 1-to-1 trade. But if you're looking to be more patient and you're looking for a deeper retracement, you would wait for price action to hit our upper level, and this is where you would have a risk of approximately 25 pips. Again, this will happen only if you get a double top at this level, or an exception to this rule. If price action hits this area, you could be looking to go aggressive. If you did get a bearish divergence, then you could be looking to be aggressive in anticipation of price action will continue to the downside. And as you can see, this second trade would offer you a better risk to reward. Actually, they have a risk of 25 pips for a total take profit of 50. So this will be our nifty 2. And yeah, if you look into your profits, this was something I'll touch on my mega preparation. So hope you enjoyed this short review, and I'll see you in the second part of our review. So welcome back to the second part of our review. So to kick things off, this is a pair that my partner was looking at. We hear analysis on the pound dollar and the chef dollar, but for now we'll start with pound dollar. Where, if you remember that he stated that as soon as price action previous weeks back violated his major support level, this is where he was in an overall selling bias, but he said that he was waiting for price to at least give us a push to this area where past support has to become a future resistance, and this is where trend continuing traders will be looking for a certain opportunity, anticipating a move to the downside. But this is where he mentioned that he wasn't interested, just as yet, for this overall short term. He was particularly interested short uptrend to at least give us a push to this up move, and this is where he will looking to take advantage of the small move. And as you can see, for this past week, nothing really happened. We had a bit of a slowdown or consolidation, but on our other side, we did hit an oversold state, and as you can see, we kind of forming bullish divergence. So hopping down to a trading time frame to see exactly what happened, we could see the price action was starting to slow down, and as my partner mentioned, this is where you could see price action channeling. And the channel is the first sign of a market slowdown. You can see price action was starting to channel to the downside. At this candle over here, this is a restated that waiting for price action to at least give us a push. Touch the wick of this candle, should not close below the wick of this candle, and this will give us a valid Dow bottom, giving us a signal for entry. Now, we had one of our filters in check, which is just a bullish divergence. As you see from our other side, we do have a bullish divergence. So the only thing that we were waiting for in order to have a valid signal for this trade was to get a double bottom. And as soon as price action opened, price failed to test the close of this candle. We lit up a bit of indecision, and finally right at this area, this is where we managed to test the close of this candle, but did not close below it. And this is where we had a valid signal for entry. The last thing that we were waiting for was to get a higher close. And as you can see with this candle, this is where we indeed got a higher close. So this is a valid entry signal. With entry just at the close of this candle, stop loss was supposed to be 10 pips below previous low. Depending on the style of trading, we at 35, so approximately 45. And then we would look for a psychological number to put our stop loss at 34,700. Okay. And first take profit, as my partner said on the first video, we were waiting for a retest of the structure. So approximately you were looking for, this was a trade that offered us a risk of 49 pips and a total take profit of 96. So this would have been a pretty good trade to start the week. So at this point, this will in the market, price action gave us a bit of a retest to the downside. Could have been panicking, but we were all still safe. We lit up close to our take profit, didn't quite hit our take profit. Bit of indecision, and finally, as you can see, we hit our take profit. So at this point, this is where you had another choice where you could either take your money and get out of the market, or this is where you would have been willing to go for a second take profit. And for second take profit, we were looking back at this retest of structure. But if you're willing to take the first take profit, then you would have got a comfortable 96 pips, and this will say you were looking for additional 96 minus 141 approximately an additional 50 to 40 pips. So, and this is where you only break even. Now, if you did take that choice, you'd see that price action finally went to the touchdown, would have stopped you out, and you wouldn't have lost money, but immediately you would have given back your profit. And this is where price action is currently at. So if you manage to get involved in this pair, then you would have got a comfortable 96 pips, head first take profit, and yeah, you would have been good to go. So currently, what is happening with this pair? Although we managed to get our first take profit, you can see the price action didn't do much. So we're still in a consolidated market. Okay, let me grab my tool. And if I could grab this, you can see price action is failing to give us. Price action is failing to give us a sequence of higher highs or higher lows. Instead, this is where we're in a ranging market. And 80% of the time, when price action is in a range, this is a sign for our market reversal. So you could still be in an overall long and bias. We might wait for price action. As you can see, we currently overbought, so we cannot be looking for a long opportunity at this point. We might wait for price action, give us a push, just hit this major resistance level, come back to the downside, and this is where we might consider going back, having a long opportunity, anticipating a breakout and a continue back to a major resistance level that we were talking about on the daily chart. So this is it in the pound dollar. So switching to the USD shift. Okay. So I'm certain by now that you have noticed that both my partner and I were looking for an overall sell in the dollar. And right here on the shift, if you want to see all of these videos in full that we have in a review on, please just go through the past two latest videos, and these are the videos that we had analysis on. So this is where price action was currently at, and my partner again anticipated a short opportunity, meaning we were looking to sell the dollar. And this way he mentioned that we was waiting for price action to at least give us a push to the upside to complete our double top, and after that get a lower close, and this would have been a valid signal for entry. Because as you can see on the RSI, we also got one of our filters in check, which is our bearish divergence. So the only thing we were waiting for was to get a double top. And as you can see, let me try to zoom in. We never got a valid double top signal. Let me remove this. As you can see, price action really down. Went to the upside, failed to retest the structure level, and didn't really give us much. Really to the upside, went back down, still no valid double top, and up until the price action is currently at, we never got a valid double top, meaning we never had a valid entry signal. So we couldn't have taken this trade. Still have to be patient. We don't force trade. If a trade doesn't appear, then we just let it be. We just continue being patient. And similar to what we were looking at on the pound dollar. Let me try to remove this, make it clear. Just to show you, similar to what we were looking at on the pound dollar. You can see that this is where price action was starting to channel, giving us a first signal of a market slowdown. You can see. And after that, similar to the pound dollar, this is how we call correlation. You can see that now we're also in a channeling market. We're in a ranging market. Again, a range is an 80% chance of a market reversal. Again, similar to what we saw on our pound dollar, price action is oversold, so we cannot sell this deep. So we also have to wait for price action to at least give us a relief to the upside. But in this case, we've already broken our major structure level, so possibly we might wait for price action. Let me grab my tool. Already, if we do get a value break below, close below, we might wait for price action, give us a relief to the downside, and finally retest the structure level and get a valid double top. And this is where we might still be looking to hop in over short an opportunity. So overall, this pair, although we didn't get, although for one pair on the dollar, on the pound dollar, we did get entered and we managed to get some of our profits. Overall, we haven't switched our buyers. We're still looking to sell the dollar. Possibly we were a little bit too early, but our overall bias is still the same. As you can see, we're still completing our setup, still patient as ever. And yeah, I really hope you enjoyed this video. And yeah, this is it for this week. I hope you enjoyed. See you next time.